Jeff Bezos is the model for entrepreneurs on how to grow and build wealth and pay no taxes. Jeff Bezos' tax return got disclosed along with a bunch of other wealthy people a few years ago. In today's video, I'm going to break down the strategies he used to minimize the taxes he needed to pay, which is a strategy every entrepreneur can use. I'm Matt Sorensen. Let's build wealth. Now, before I get into the strategies Bezos used, I want to make sure everyone understands the different types of income we have in the federal tax code and how it's taxed. The highest taxed income out there is wage income or business income. Do you think Jeff Bezos takes a big salary out of Amazon? Nope, he takes an $80,000 salary. Why? Because it's taxed at a 37% tax rate, plus you're paying Medicare and Social Security tax on it. It is the worst type of income to get from a tax perspective. The next level of taxed income is investment income, and I would call this low taxed income. Investment income is like dividend income from his Amazon stock, or capital gain income when he sells the stock. Now, this is something Bezos does get if Amazon distributes a dividend or profits to shareholders. He owns hundreds of millions of shares of Amazon stock. So when a dividend is declared, he's only paying 20% federal income tax on the gains. Now, Bezos has also most recently in 2024 been selling shares of Amazon stock, billions of dollars worth of Amazon stock, which he has held for a long time, over a year, so he pays long-term capital gains rates, which is 20%. Now, he has been taking some of that income. He has been selling his shares and getting dividend income, and he is paying that lower tax rate, but that is not how he's been monetizing his wealth built up in his Amazon shares. What has he been doing? He has been taking loans and debt against his stock in Amazon. And what is the tax rate when he takes a loan against his stock on Amazon? 0%. So for example, let's say he owns $1 billion of shares in Amazon stock. He owns multiple hundreds of billions of it. But let's just say he takes $1 billion of it and says, I'm not gonna sell this because I'm gonna pay a 20% capital gains rate. Instead, I'm gonna take a loan against it, maybe $700 million, and a bank will lend him that because the Amazon shares clearly have value, just like you could take a loan against your house, your rental property. There's some collateral there, the bank will lend it to you, but is that loan you get, that equity you're stripping out of your home or your stock, is that taxable to you? It's not. The debt is not income to you, but you get to go use that debt to go buy personal goods or whatever the heck you want. That is how Bezos has been monetizing the massive wealth he has been building up in Amazon stock. Now, here's why that's genius from a wealth building strategy, not just a tax strategy, and he's keeping all the money in his pocket, not sending it to the IRS, but as a wealth building strategy. What did Jeff Bezos believe in and know? Amazon. He believed in Amazon and the value of the stock was going to go up over time, and it has. Why would he sell it when he could otherwise monetize the value by getting a loan against it? Now, this is a strategy a lot of wealthy entrepreneurs use. People who start up businesses and grow them, they don't want to sell the shares for two reasons. One, they think they're going to be worth more over time, like the Amazon stock, and two, they don't want to pay taxes on the income, but they need to get some value out of the business. So they take a loan against the stock portfolio, and there will be banks that lend against this. And the downside is you will pay some interest on that debt, and that's not great, right? There's a cost to that. But if the value and increase of the shares over time is going to go up and you believe in it, that interest rate is negligible. And remember, you're paying no tax on that money and the value that's being extracted from the stock. Now, as you're starting out with a business, this could be a small business, a lot of banks aren't gonna lend you against the value of your shares. But if a business grows and you have significant success, where you're having 10 million of profit a year or more, it is likely a bank will lend you money against the shares. And not only do you stay in control of your business, like Bezos was able to, you also extract the wealth out of it with no tax, and you get the upside of the growth that you believe in, and you're betting on yourself and your company's value. This strategy can be done with the rental property. It doesn't really matter the asset, but the principle here is look at the value of the assets you have, hold them, let them grow in value, take into account the interest you're going to pay, of course, on the debt, but remember, it is not taxable to you. You still stay in control of the asset, and you get the upside of appreciation over time. And for Jeff Bezos, this has been an incredible strategy because Amazon stock has gone up over time. He's been able to keep his influence, and he has paid hardly any taxes along the way. Now, saving on taxes and building wealth can be tricky, and everybody's situation is different and unique, and the strategies Bezos may use may be different from the strategies that you use. But I cover all of those strategies on my channel, so please make sure you're subscribed. I'm Matt Sorensen. We'll see you next time.